All right, welcome back. Today, we're jumping right into the thick of it, into the absolute chaos of the crypto market. You know, it really feels like it's being ripped in two different directions. On one side, you've got these scary headlines, charts that are just bleeding red. But on the other side, there's this quiet, deep current of progress, real foundational stuff that could literally change the game. So that's our job today, to separate the noise from the signal.
So you see the prices tanking. And the big question on everyone's mind is, what do? Is this the time to panic, to just get out? Or is this one of those moments where you should actually be pouncing on an opportunity? Well, to figure that out, we got to look past the headlines and see what's really going on. Okay, so first things first, let's just survey the damage. There's no sugarcoating it. The market took a serious hit. Some folks are even calling it the August meltdown. And when you look at the numbers, yeah, it's pretty brutal.
I mean, just to put a number on it, Bitcoin alone fell by $10,000 from its recent all-time high. A drop like that fast, it's enough to give anyone a heart attack, right? And that's the number that's really driving all the fear you're seeing out there.
And this wasn't some slow, gentle dip. No way. This sell-off triggered a massive chain reaction of forced selling. Think about this. In just a single 24-hour period, over $1 billion in leveraged long positions. People betting on the price going up with borrowed money. They were completely liquidated, wiped out. And that just creates this vicious cycle that shoves prices down even harder.
So the natural question is, why now? What's going on? Let's unpack what's making everyone so anxious. This is what we're calling the noise. It's all the loud, dramatic stuff that's sucking up all the oxygen in the room.
It really boils down to three main culprits. First up, we got a U.S. jobs report that was way weaker than anyone expected. And to make it worse, they revised the numbers from previous months way down. That really spooked the market. Then you've got new tariffs getting slapped on a bunch of countries, creating all this trade uncertainty. And to top it all off, geopolitical tensions just went through the roof, with some scary talk from Russia prompting the U.S. to move nuclear submarines. So you can see why everyone's on edge.
But, and this is a huge but, here's where the whole story gets really interesting. See, in the weird world of finance, bad news for the economy isn't always bad news for the market. It's kind of backward, and we're about to see how all this fear might actually be hiding a pretty significant silver lining.
Right, so this is where the script totally flips. That weak jobs report? Yeah, it's terrible news for the economy, no doubt. But for the markets, it's seen as good news. Why on earth would that be? Well, it's because it puts a ton of pressure on the Federal Reserve to step in and cut interest rates to get things going again. And historically, lower interest rates have been like rocket fuel for assets like crypto.
And hey, don't just take my word for it. This isn't just some wild theory. Right now, traders are pricing in a 90% chance of a rate cut in September. After months and months of will they or won't they, the market suddenly thinks it sees a clear path to cheaper money. And that is a powerful reason to be optimistic.
Okay, so now let's do it. Let's tune out all that short-term noise and really listen for the long-term signal. And the first place we find that signal isn't in the news headlines, it's in the actual technology being built on-chain, totally separate from the daily market drama. Let's just take Cardano as a perfect example. Its founder, Charles Hoskinson, he said something fascinating recently. Wall Street loves midnight. Now, Midnight is Cardano's new privacy protocol. And what makes it so special is that it's built to solve a huge problem. It lets big financial institutions, TradFi, interact with DeFi while still getting the kind of privacy and compliance they absolutely need. It's a bridge between two worlds.
And that's just one thing.
While everyone's freaking out about prices, the Cardano ecosystem has been hitting huge milestones. They've demonstrated 1,000 transactions per second, new kinds of stablecoins are launching, and they're about to do this massive airdrop to over 33 million addresses. This is real work, real progress, happening quietly in the background.
Now, to really get why this stuff is cool, we need to understand a key idea, the over-collateralized stablecoin. So unlike some stablecoins that need a bank somewhere holding real dollars, these are different. They're backed on-chain by a crypto asset, but you have to lock up more value than you get out. So to get $1 worth of a stablecoin, you might have to lock up, say, $1.30 worth of ADA. That extra bit is a safety buffer, a cushion that keeps it stable. And this is where modern DeFi gets so elegant. So with a new protocol like OBYUSD, you can lock up your ADA, and then you mint these stablecoins that you can use for whatever you want. But, and here's the magic trick, while your ADA is locked up, you still earn all your staking rewards, and you still keep your voting rights in the network. You get cash to use without giving up the best parts of owning the asset. It's incredible.
All right, so if the tech is the first big signal, the second one might be even bigger. And it's coming from a place you might not expect, Washington, D.C. Seriously, some people are calling this the single most bullish piece of crypto news in the last 10 years.
That quote right there is from the new chairman of the SEC, Paul Atkins. Just let that sink in for a second. America must lead it. This is a complete 180 from the hostile, confusing regulatory vibe we've had for years. The mission isn't about fighting crypto anymore. It's about leading it. This is a seismic shift.
And this isn't just some nice sounding speech. No, there's a concrete plan with a name and everything. Project Crypto. This is the SEC's actual official game plan for weaving digital assets right into the fabric of the U.S. financial system.
And the goals here are, they're absolutely massive. Project Crypto is talking about a future where stock exchanges run on-chain, where money market funds are tokenized, where there are finally clear rules of the road for everyone. They want to embrace the tokenization of everything, not run from it. This is the institutional clarity that the entire crypto space has been begging for.
So, let's just pull this all together. The noise, that's the short-term stuff. It's all about daily prices, liquidations, it's driven by headlines and raw emotion, mostly fear. But the signal, that's the long-term story. It's about foundational tech, real innovation, and now a huge pro-crypto shift in policy. One is about panic, the other is about progress.
And that really just leaves us with one last thought. In a market that's constantly being yanked between the drama of the daily news and these powerful, quiet shifts that take a decade to play out, it's up to all of us to figure out where the real story is actually being written. Thanks for joining us.